From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video, Ebola, Jobs Friday, Yom Kippur, two-step. The high of the day in the S&P came in at 1962.5. Recently, the low came in at 1945.20 early in the day. And last, we're 1962 even. We're up 23.5 handles. Can you believe that? Total volume, we had 365,000 minis traded in Globex. We have a total of 1 million traded all day, and we have 1,000 big S&Ps traded in the pit. Now, I guess the big question would be here, is the decline over? My answer to that would be that October has just begun, and I'll get to that in a minute. Next week, we have a total of 11 economic releases, kind of a slow economic calendar. We have 10 T-bill or T-bond auctions or announcements, and we have the FOMC Minutes. Now look, I want to talk a little bit about how the institutions and the funds sell S&Ps. And from my experience in dealing with all these types of big funds, when the S&P goes down as it does, there's several different types of selling. There's program selling. There's specs, where the guy just wants to speculate on the short side. And then there's your hedging. So it's not just you're hedging it, meaning that they're long stock in one portfolio and they sell S&Ps to protect that. Now, what happened over the last couple of days is I think that type of selling eclipsed. And I mean that because when everybody starts to roll lower like they have in the last couple of days, and you get these big margin calls and liquidation, there tends to be a low made. And we've talked about this many times, and I think that that's what we saw. But then when you combine it with going into the holiday and the jobs number, it gave it an extra kick. Now, I don't know, the other part about this is what I was going to explain is that when these big funds sell like that, and the S&P's gone down over a 3 or 4 week period, they just don't get out on the first pop. So it was very unlikely that yesterday, as the S&P rallied off those early lows of the day, or the mid-morning lows of the day, that these funds or investment firms covered their shorts or lifted their hedges. It's very unlikely. They just don't shuffle like that. Billion-dollar hedge funds, they just don't go back and cover 5, 10, 15,000 S&Ps like that right away. They have to look at their books. They have to see where their stocks are at, and then they make their decisions of how to unwind that spread. But what I think happened today is they didn't buy yesterday, but they got caught in a stampede today. The jobs number came in better than expected. As we said on our morning report, the S&Ps gapped higher early in the morning, and then they gapped higher right after the number. And then after a little downtick after the open, you could see the buying flooding in the imbalances on the charts. It was like a stampede. On one push, I counted about 15,000 minis bought on one little blip in the morning. That told me that a lot of these hedge funds were starting to lift their hedges or start to cover their shorts. Now, the other part about this is I want to talk about next week, and I always think it's important. And this goes back to my question about, is the decline over? It's just the beginning of October. The Dow lost 1,874 points, or 18.2%, the week ending 10/10/08. It was the largest drop for the Dow in the Dow's history. So as we go into October, and even despite that we've had this big bounce, and I am a bull guy, I think that you've got to still be cautious as you move forward with the S&Ps right now. I also think that the bonds are overdone on the upside, and I also think that you just got to be very, very careful going into October. While it is a very, very negative month, or it has negative overtones, and it's known for all its crashes, I want to remind everybody, it's also known as the bear killer. So are we there, right? Are we there yet into the second or third trading day of the new quarter? I don't think so, but the markets will tell us that as we move forward. I'm not going to be here for the closing print today. I want to thank everybody for following me this week. It's been an exciting week of trade, and I suspect with where the VIX is trading right now, it's going to continue to be an exciting trade into next week and beyond. I'll see you guys next week.